Welcome back, everyone. Thank you for being here at the Singapore Pavilion. Our upcoming program, hosted by HSBC, will showcase how commercial banks and corporate banks can support and accelerate the adoption of sustainable and resilient supply chains. There will be a presentation followed by a panel across different segments of the ecosystem to discuss some of the challenges, opportunities, and solutions that can advance this global transformation. Please join me in welcoming on stage Ms. Francis Chen, Head of Sustainability ASEAN of HSBC, to give her opening remarks and presentation. Francis, please.
The wind. Good afternoon, everyone. Thank you very much for joining us. I know it's very late in the day and everybody must be exhausted, so we appreciate you sharing the time with us. And thank you very much, Felix, for the kind introduction. I guess no need to further introduce myself, but I just want to give a little, snippets of why do we want to talk about supply chains, because I think at COP you hear a lot about carbon markets, you hear about nature-based solutions, all these very sexy sounding things, and I guess supply chain seems not very novel, but actually I feel that supply chains is where a key area where sustainability really comes to life. If you look at it from an economic perspective, that's where it's a cornerstone of our global trade and our global economy system today. If you look at it from an environmental perspective, for most companies, the majority of their greenhouse gas emissions lies in their supply chain, and that's the area where they need to work on. If you look at it from a social perspective, that's where you have different layers and tiers of jobs and employment that is essentially connected by the supply chain all the way down to the community level. So this is an area where we feel that it's really, truly important. I'm very excited to be joined by my fellow speakers today, which we will introduce them a bit later. In terms of where we are today, of course, I think in the past few years, it's been proven that the global supply chains are quite vulnerable. The global supply chains have been tested by various things, the pandemic, the climate events, the geopolitical tensions, you name it. And I think it's quite important for us to think about how we can make them more resilient and more sustainable, especially when you see investors, regulators, consumers actually expecting companies to make their supply chain more sustainable as well. So without further ado, whoa, if I can work this, great. Wanted to share a few examples of how commercial banks can work on making supply chains more sustainable, and of course we will bring in other perspectives later. I think maybe taking a first step back, which is before we even talk about small supply chain financing and what that even means, we probably should talk about what supply chain financing is, which is actually quite a simple concept. It's essentially a financial solution or a financial arrangement between the buyers and the suppliers to make sure that they can better manage their cash flows. So usually if you buy something from a supplier, then the supplier would provide the goods and services, they will issue an invoice, the buyer would then pay the suppliers. But if you have a supply chain financing solution in place, essentially you're putting a bank or a financial solution provider in between the suppliers and the buyers. So when the suppliers provided their services and goods and they issue the invoice, the banks can actually pay them earlier. So instead of asking the buyers to pay, the banks can help pay in advance. And then later on, the buyers will only be debited essentially when the invoices are usually due, typically 60 to 90 days after the services and the goods are delivered. So this is actually a simple concept. So I mean, from a supplier perspective, they get to access capital essentially earlier if they're able to honor their terms. And from a buyer perspective, there's not necessarily immediate cost because there's no change to their terms of agreement with the supplier. So that's kind of how supply chain financing works. But what does it mean when you add sustainability into this kind of arrangement? Essentially, it's the same. It just has an additional sustainability element in the sense that a buyer would set a sustainability-related KPIs or targets. And if a supplier is able to meet the KPIs or the targets, then the supplier will actually either be able to access the working capital earlier or they will be able to get more preferential rates. And usually these pricing can also be tiered actually by the performance level. So this is determined by the buyers. So if they decided to have different performance on sustainability and different tier, then you can get more preferential pricing if you perform better from a sustainability perspective. So in terms of why set up this kind of arrangement and what are the benefits, I think in addition to what I've mentioned, which is kind of optimization of working capital for both kind of the buyers and the suppliers, there are a few additional benefits, I would say. From a buyer perspective, this is where they can leverage this program to really drive their sustainability objectives through the supply chain. They can use this opportunity to align their sustainability objectives with their suppliers' sustainability objectives. And the supply chain would actually therefore be more resilient because they're also able to build their relationship with the suppliers through this kind of program. If you look at it from a buyer's perspective, of course for them it's being able to access preferential pricing. And one thing I didn't really get to mention just now on sustainable supply chain financing or just the supply chain financing in general is that the key benefit for buyer is that they're able to access a pricing that usually that they're not able to access if they go to a bank on their own. They're able to access a better pricing that is based off of the credit worthiness of the anchor buyer, which is essentially their client. So that's very beneficial. And from a buyer's perspective, they can look at improving their sustainability profile, which actually makes them more competitive in the face or in the perspective of the other buyers, and that increases their competitive advantage. And at the same time, they also get to build relationship with their buyers as well. So we do consider this as a win-win, and the benefits are not just financial. There are a lot of other areas that we can kind of look at. So this all sounds very wonderful, but the devil always lies in the details. So how successful a program could be in terms of how credible the program is or how effective the program is, actually a lot of it lies in how well you can set a KPI from a buyer perspective. So as you can imagine, there are quite a few key considerations for a buyer when they set sustainability-related targets or KPIs for their suppliers to consider. The first consideration, of course, is in terms of consistency and relevance. Whether these targets or KPIs are related to their overall sustainability ambition, strategy, objectives. You can't really set a KPIs or targets that just came out of nowhere, I would say. And the second, of course, is whether these targets are ambitious from where they're trying to head, whether it's quantifiable, it's measurable, all the good tenets, I would say, that you will have in terms of looking at targets. The third area is actually around whether these targets are credible in the sense that is it aligned with like industry standards? Is it aligned with the international standards? And in terms of the progress that they're reporting against the targets, how is it being reported? How is it being tracked? Is it being verified by third party? The credibility of how they're achieving these targets are actually quite important. So for a buyer, they actually need to consider all of these aspects before they set a target and a KPI. And last but not least, it also needs to be fair and transparent in the sense that they also need to communicate these targets and KPIs in a comprehensible way to the suppliers so that the suppliers will be willing to get on board with them on this agenda. And the suppliers also need to understand how they are being measured, essentially. So all that, I would like to just close, I think, with a few quick examples of how this kind of comes to life, and then we can then open up to more perspectives from the ecosystem. So a few examples of the sustainable supply chain financing that HSBC has done. One is we do have a program with Levi's, and for Levi's, the key ask was they were very keen to kind of drive their environmental agenda through the supply chain. They wanted to have environmental KPIs with the suppliers, specifically from a water perspective and also from a greenhouse gas emissions reduction perspective. We started speaking with them in 2019, and the program was only in place by 2021. So needless to say, it's a very long, elaborated process where we really think about whether the targets make sense or not for the supply chain. Based off of that, they were able to initially tier the suppliers into 6 different tiers, and there's all the different kind of pricing implications with the different tierings. And of course, I think the beauty of a sustainable supply chain financing program is that it's never a one-off or one-year program. It's a multi-year program where you look to evolve the KPIs over the years. You look to involve more and more suppliers as you go on so that they can join you on this journey. So for Levi's, over time, they actually evolved their supplier code of conduct And if you download their implementation guide, it's a bit daunting, but it's 300 pages long. So as you can see, they really thought through what they want to work with, I guess, on the suppliers. And nowadays, their sustainable supply chain financing program is actually tagged to the supplier code of conduct and how well the suppliers are able to implement the code of conduct. And they divided their suppliers into 4 different tiers in terms of pricing. So that's one example. Another example in a very similar, I would say, sector, not exactly the same, but it will be Walmart. And this is also another project that we've worked with them since 2019. And initially, the drive for Walmart, why they want to why they want to start this program is because they have something called the Project Gigaton, which is they want to reduce a gigaton of greenhouse gas emissions from their supply chain by 2030. It's a very ambitious program, so they needed to work with the suppliers, and that's why we started working with them on setting this program off. At the beginning, they were actually relying on the third-party rating on determining the tiering of the suppliers. They were also relying on the in-house supplier rating as well, so a combination of the two. But as I've mentioned, the beauty of these programs is such that it does evolve over time. So right now, where we are with Walmart after a few years is that it's an enhanced version of the program. So actually, there are KPIs that are tied to, first of all, CDP scoring. So Walmart is encouraging their suppliers to get on board on the CDP program. And depending on the score that you get on CDP, you can get incentivized by different pricing. Another thing is they're also encouraging the suppliers to set SBTI or science-based targets, type of targets, ideally verified. So if you're able to set a SBTI target, then they will also reward you on that as well. So we've really seen how the program has evolved over the years, and they've certainly, I think, they're really kind of propelling their suppliers going forward. The last 2 quick examples that I want to share, just because I want to share that I think we see a lot of examples from kind of the retail industry, the textile industry, apparel industry, but it's also possible to do this with different industries as well. So the last 2 examples here is one from the power sector, another one from a glass and construction material manufacturer that is French. And for these 2 companies, they're both looking at reducing their greenhouse gas emissions essentially. For Saint-Gobain, they have a clear net zero by 2050 target. For Town Gas, which is based in Hong Kong, they have a clear Scope 3 emissions reduction target. And also because the Hong Kong Exchange was about to start mandating Scope 3 emissions disclosure by 2026. So they are juggling, I think, a few different priorities, and they were able to work with us to structure the program. For Saint-Gobain, they were going for kind of a tiered pricing. So if you achieve a certain rating, then you get a better pricing. For Town Gas, it was a program where they're looking at early payments. So if you're able to achieve the different KPIs that they've met, then you can have access to earlier payment as well. So that gives it a very quick wrap to my presentation. I hope these examples can spark a bit more discussions later. Thank you very much.
Thank you, Francis, for the inspiring presentation that demonstrates how HSBC has taken progressive steps with their corporates in financing the global transformation of supply chains. With this, please join me in welcoming the moderator of today's panel, Ms. Fang Yuling, Sustainability and Climate Change Practice and Asia Pacific Center Sustainability Excellence Leader from PwC, and her fellow panelist, Ms. Bambi, Bioeconomic Lead, Conservation International, Dr. Misha, Head of Private Sector Climate Finance, ASEAN Development Bank, and Ms. Francis from HSBC.
Well, good afternoon, everybody. And I thought that that was a really interesting presentation by Francis, really good, with some really tangible examples about how finance can help in terms of the sustainability and decarbonization of supply chains. I thought the Project Gigaton one was really ambitious. Essentially we have about 51 gigatons a year. So one is actually quite a lot, from one organization. So anyway, so we are going to have a discussion right now. And joined with me are a few panelists coming from different kind of perspectives. And first one is Ms. Bambi Samrock, did I say that right? Coming all the way from Conservation International in DC. And she is the Senior Vice President of Bioeconomy at CI, where she leads global strategy and partnerships to scale investment in nature and local economies. With over 2 decades of experience in sustainable agriculture, she has collaborated with many leading companies, and I'm sure she'll share some examples later. And she serves on the board of Global Coffee Platform and Sustainable Fisheries Partnership, and her work has been featured in Food Tank, in the Chicago Tribune, and Daily Coffee News. All I can say is I think she really likes coffee. Yeah. And next up, we have Dr. Misha Lenz. Did I say that correctly as well? Perfect. And he heads up ADB's private sector climate finance team, leading the provision of support for climate finance transactions and formulating strategic approaches to achieving climate targets. He has managed private sector climate finance funds, designed innovative blended finance instruments, and expanded ADB's subnational finance footprint in Asia Pacific and the Pacific as well. And he was previously from EBRD, where he opened the Lebanon office and led cross-sector banking operations. So lots of experience right there in finance. And last but not least, of course, the star just now presenting, which is Frances Chen, Head of Sustainability ASEAN at HSBC. She oversees the delivery of HSBC's net zero and sustainability agenda in Singapore and ASEAN. And she works with the Head of Sustainability in countries to develop, coordinate country-level plan, governance forums, and capacity building initiatives, and many, many, many other things. So really value for money person, doing a lot of things in sustainability for HSBC. Well, our conversation today is about supply chains, and just now, I think Amy from Marsh mentioned about a car company who couldn't get parts because there was flooding from a particular country. And supply chains, I think, has really been coming into the picture and focus. Well, firstly from COVID, not a great example, but supply chains we really tested supply chains at that point in time, but also because of the physical impact of climate change, that's testing supply chains as well. And I think the supply chains are super complex also. For this session, I'm going to split up the conversation into a few areas. Firstly about finance, and then another area about how nature and climate interacts with supply chain, and of course around data as well and traceability. But I'd like to open up the conversation to the panelists about what is their perspectives of supply chains and how that interacts with sustainability and climate as well. So, and its resilience. So maybe just open up to the panelists about how you define sustainability, climate resilience, and with the supply chain as well in your context. Maybe we can start with Bambi.
Thank you, Yulin. And it's a pleasure to be here. It's a great question in terms of how do we define resilience. So like you said, we see a lot of climate shocks, of other tariff shocks, hitting supply chains, and the ability to be prepared for a shock.
There's a way to hold it. It's like this,
Okay.
like
Is what
perpendicular.
resilience is all about, is it being able to prepare for those shocks and meet those head on. And that takes long-term thinking. And it's something that businesses have to prepare for and think about, not just like the short term, will I have this commodity on my shelf in the next year, but how is this going to look in 5 years' time, in 10 years' time? These are the products that I'm really dependent on as my business. Where will I be getting those? And will the farmer base really still be there to supply those commodities? And so when we think about resilience, it's really about the resilience not just of the business and those commodities, but it's the resilience of those farmers being able to continue to produce and manage the land that they are really dependent upon, and the products that really provide them with their livelihoods. And also the landscapes, like what's the resilience of those landscapes to evolve with climate and with some of the shocks that are coming, in terms of can we continue to produce those commodities on those lands while maintaining biodiversity, ecosystem services, and sequester and remove carbon from the atmosphere via those landscapes. And so when we think about resilience, it really comes down to the people, the producers themselves, the landscapes, and the commodities. And those things have to come together to really become a more resilient supply chain.
And a great question maybe later about the role of governments and also the role of corporates as well. in maintaining the kind of resilience as well, especially when it comes to people. Misha?
Yeah, thank you very much for having us here and also for bringing the topic of supply chains to the table, and thank you all for joining. I know we're in the Singaporean pavilion, but I assume some people of you might not be aware who the ADB is because we don't operate in this continent. So ADB is a multilateral development bank. Just quickly on supply chain, we do around 4.9 billion of investments a year in supply chains, around 20,000 transactions. We're ramping that up as well, and HSBC has been a great partner over the last 21 years. I looked it up actually. And over the last decade, about 1.5 billion in joint investments in the trade and supply chain finance space. Now, when we talk about resilient supply chains, I think COVID has actually shown all of us how used we were to have well-operating supply chains. All of a sudden, we didn't have toilet paper anymore, and we all freaked out. So when we think about resilience, oftentimes we think about the pandemic in terms of supply chains. Right now, lots of thought is about geopolitics, obviously. But I think we sometimes forget the climate part of it. And Francis set the scene really, really well in terms of how important it is, because every single supply chain is touched by nature and therefore touched by climate and needs to be resilient to withstand that climate risk. Now, in addition to that, I think supply chain finance and supply chains generally have also a huge leverage that we need to kind of lift in terms of climate resilience and climate relevant measures. One of the examples is supply chains oftentimes still are funded based on paper. So, people have to fill out forms, it's all paper-based. There's very little digitalization. Now, you spoke about KPIs and the importance of KPIs and tracking. Based on that paper, I cannot track anything. So I cannot put, the right incentives on a supply chain, transaction if I don't have the right capability to monitor that, to actually quantify it, because it's all paper-based. And we are jointly with the ICC working on an initiative which is called the Digital Standards Initiative, kindly hosted by the government of Singapore, actually, to try to digitalize all of this trade and supply chain, in particular trade documentation. Now, one of the big issues there is supply chains are global these days, right? It's not within country, and they have been for some time. So we also need the right legal regulatory environment in order to make that happen. We support the UN Citral model law on electronic transfers, which provides that. And I think there's a lot more work to do in that respect, and I commend Singapore, who's taken a huge step in driving that forward, in particular in Asia and the Pacific.
Super. Francis?
No, thank you. I think the only point that I would like to add is actually, because when we come to think about resilience, it's about continuity, and I think Bambi and Misha have touched on that. So the last point I want to add is diversification. And this actually means it's not to put it in a zero-sum game, but because we bank, as a bank, we work with both suppliers and buyers. So the way we see it is a buyer cannot be dependent on one single supplier, and a supplier cannot be dependent on one single buyer. The key here then is to really think about how you can increase the competitive advantage or how competitive a supplier could be to support them in this journey on diversification.
Yeah, I think, it's really good points that everybody said here about how is it going to impact smallholders, farmers. That's the people aspect of it, the digitalization and then diversification part as well. I feel that we haven't really talked about AI also, and that has a big impact as well on supply chains. But we can talk about that later. But I want to go into a bit of the financing aspect of it. And Francis, you talked a little bit about financing just now, and maybe this is something that I'll ask maybe Dr. Misha and also Francis. But how is it that financial institution and development banks, how can they catalyze the shift towards more sustainable supply chains, particularly in emerging markets, because the financing gap is a little bit larger there. So how can we use instruments, blended finance, some of that, which Francis talked about, to catalyze this more, particularly in emerging markets? Maybe Francis or Misha? Yeah.
No, thank you. I'll give it a kickstart. I think I've gone through a few examples. So A few ways that we're looking at, we actually take kind of a three-pronged approach in working on this. And in my presentation, I've already covered kind of the top-down approach, which is we work with the big corporates, or who we call queen bees, essentially, who can kind of catalyze change through the supply chain. So that's one way that we're looking at it. But the other way that's important is actually the bottom-up approach, which is you work directly with the small and medium enterprises who are suppliers in the supply chain. And so on that, we do have a few we do have a few propositions. One example will be, for instance, the sustainability improvement loan that HSBC has come up with, and we launched that in our major markets in the region. And how that works essentially is that if a supplier is willing to be on the EcoVadis program, and depending on their rating, we actually give them a more preferential rate of loan, and this is a direct lending. So it's not as complicated as being a part of a system of supply chain program, but we try to do different approaches to allow them to have access to more funding. The last prong is around partnerships, because I think ultimately there are still gaps that we can plug. So we actually try to work on capability building for the SME through philanthropic partnerships. So for instance, with philanthropic funding, we actually work with the Business Environment Council in Hong Kong and CDP to allow SMEs to be onboarded to the CDP supply chain program for free, and for them to essentially build capability through that. Another example is our partnership with the Apparel Impact Institute. So they're able to work with textile suppliers in India, Bangladesh, Sri Lanka to kind of upskill and advise them on decarbonization measures that they can do. So I think it's really about using all the tools that you've got to try to help this cause.
So what you're saying is that actually the financing part of it, the instruments are, we're not doing something new, right? But what you need is the data, which we'll come on to a little bit later, and partnering with like CDP is useful, just to make sure that we have the right type of targets as well.
Exactly, and I think it's also for, and I think maybe Misha and Bambi might touch on it, but it's also to ensure that the SMEs are ready to accept this financing. Yeah. They need to be upskilled to a certain degree to appear credible in front of the financiers and the buyers, etc., to access these resources.
And nice that you give them a little bit of a preferential rate as well, right, to do so. Yeah. Misha?
It's really hard to follow Frances because she just did a roundhouse kick of what we can do in the blended finance space and generally on supply chain and trade finance. But maybe one thing, I mean, many of you would work in the supply chain, space, but I think it's important to also recognize that supply chains are very deep. They don't end at the first tier supplier who's usually the one who gets the financing. In textile industry, for example, as you mentioned, take that example, it's 5 or 6 layers. So you have the apparel provider like, H&M, then you have the assembling, which is the sewing and all of that. Then you have the fabric, then you have the garment, then you have, the yarn, and then it goes even down into the cotton production or whatever it may be. So it's important that we actually penetrate the whole supply chain, because if we talk about sustainability, we cannot stop at the tier 1 supplier. We have to go down, and it goes also back to transparency. Now, the way we're trying to tackle this is a concept called deep tier supply chain finance. Now, us as a bank, we provided credits. This is secured by a payment guarantee of the ultimate buyer, H&M, for example. Now, we can split that payment obligation and actually take it down the supply chain. So, part of it goes to the first tier supplier, second tier, third tier, and so on. By doing this, we're creating 3 things. First, transparency, because we know, what's happening across the supply chain, which helps us with traceability. And also, we are kind of tapping into a huge gap, which is the gap of financing for MSMEs, SMEs, even farmers at the low end. Because what they have to do right now, they have to either take very, very expensive credit, or they basically cease to exist, or they need to fund themselves without, any leverage. So this deep tier supply chain finance, we are piloting across a number of countries, and it has already in some pilot countries, including in Pakistan, really taken off. And we're looking forward to speaking to a few governments to also build the regulatory environment around it and facilitate, a broader use of that tool.
Yeah, I mean, the deep tier or beyond the first tier, I would say very ambitious, very difficult to do. But I think with good infrastructure and data and traceability possible, right? And the right kind of financing structures. Okay, great. So I want to talk a little bit more about nature right now. I think Misha, just now you said that, or is it Francis, everything comes from nature. Everything comes from nature, and it's true. So I want to do a plug right now that tomorrow, me and my colleague will be presenting on nature as well, and the dependencies that we have on nature across different industries. And when we did that study, we realized that, yes, all industries depend on nature, but to a certain degree, right? And we all depend on the ecosystem services that nature provides, whether or not it's biomass provisioning or whether or not it's prevention of soil erosion and so on. But I want to specifically talk about whether or not organizations actually know the exposure to nature risks as with regards to supply chains. And usually, even if we do anything about nature, it's usually about my own operations. But our own operations, our businesses rely on supply chains. You need something from somewhere to put together something to sell, right? And are we assessing the nature risks in the supply chains enough? So maybe for that, I want to tap on Bambi. And I know that she's worked a lot with big corporations with respect to that. So Bambi, over to you.
Thanks, Yulin. It's a great question. There's always more that we could do to better understand that these supply chains have on nature. What we've seen through the years is a lot of companies have started out looking at their supply chain and requesting and supporting sustainability initiatives through certification programs. And we've worked with Starbucks over the years, for instance, to develop their coffee and farmer equity sourcing program, which is called Cafe Practices. And that became a program because we were trying to promote sustainability within the coffee supply chain on the ground with producers. And then it became like, well, how do we scale this? How do we create a scale for good model from this? And today, that represents 99% of Starbucks coffee sourcing, impacts over 450,000 farmers, which is about 10% of the global supply, and over 1 million hectares. So that's like the first wave of looking at sustainability and including nature, because within that, there's environmental practices, there's biodiversity conservation practices that are within those standards. And that's with any kind of sustainability standards and certification program, you're going to see that within that. But fast forward, that was like the 2020 commitment of leading companies was to get sustainable sourcing commitments completed. And then it was the question of like, well, what do we need companies to do next? How do we set a larger scale ambition and help them understand their dependency and really quantify their impacts on nature? And so then we started working with Walmart to really look at 13 different commodities that really make up the bulk of their sourcing and their risk profile for the company. And there, through a year's worth of analysis, we were able to identify how much land and how much ocean it takes to produce those commodities on an annual basis. And that led to their commitment to protect, manage, or restore about 1 million square miles of ocean, which is about 2.2 million square kilometers of ocean, and also about 20 million hectares of land. And so this has led to them not just supporting their supply chains within places, but also to supporting landscape-level jurisdictional approaches that move beyond just like what are we doing on the field, on the farm, but how do we protect and restore the adjacent land so we can actually support nature conservation at scale.
So what I'm hearing is that you, for this particular organization, Walmart, identified the nature dependencies and they realized that, okay, I depend on this, I depend on that. But even despite the issue of the tragedy of commons, right, like climate, we always think that it's someone else's problem, right? They said, it's okay, I'm going to leave that with me, right? I'm going to contribute to this over and above understanding those nature dependencies in my supply chain, which is really wonderful, right? So we're going over and beyond, right? Fantastic. Now I want to talk a little bit about data and also the just transition. Well, data transparency and traceability, we talked a little bit about that just now, is often cited as a key issue in trying to move forward with a bit more confidence in terms of supply chain, right? Managing supply chain, sustainability. Can you maybe share with me a little bit more, maybe everybody, around how can organizations improve their supply chain transparency and data? And have you seen any best practices? I know in Singapore, we've been trialing a few things, but yes, would love to hear where is it best practices in terms of data, in terms of supply chain traceability, measurement, and so on. Yeah.
No, thank you, Lynn, for the question. I guess for me, it's reflecting on that. Perhaps it's not really around best practices, but one thing that we continue to talk to our clients about is to not reinvent the wheel. There are actually quite a few platforms and solutions that are already essentially developed. I mean, CDP supply chain being one, EcoVadis being another one. There's a few other big names. I'm not saying these solutions are perfect, but it is helpful to kind of focus our efforts around those programs. And of course, we continue to talk to these organizations on how they can improve their programs. Because I think as much as we kind of collectively put the data together, I know the pain point for a lot of the suppliers or the SMEs or the companies is that these questionnaires are really, really long. I mean, most of them are more than 100 questions. And it's very tiring for them to do these things. So, and this is, I think, maybe where what Yulin has mentioned earlier can come into play. For instance, whether you can use AI to kind of pre-populate, whether you can use certain certain tech to kind of pull available data from the company or from public information to fill these information and all that. I think those are areas of, I guess, instead of best practice, maybe areas of exploration going forward. But I think it's important for us to focus on what are already there and how we can improve those.
Yeah, I think that's a great idea in terms of using AI, using what's leverageable at this point in time. But in my view, everybody, for example, produces financial statements, right? Whether you're a big company or a small company, I do think and really hope that at some stage in the future, supply chain data will be, or actually any kind of sustainability data will be like as common as producing a set of financial statements. And that's where, we can, really have consistency in terms of data and transparency. But yeah, that's my wish. Misha?
Yeah, no, I agree. I think the solutions are there. So fintech is really far. AI and all of these solutions, they are all there. We just need to apply them. I think one thing that holds us back, which I mentioned earlier, is regulatory frameworks, which are actually cross-border regulatory frameworks, because we are not dealing with intra-country kind of trade. We're dealing with international, global trade. I wanted to make a point, though, which I find lacks more work, which is the inclusion part. And in particular, I want to focus on one inclusion topic, which is gender. Many of you will be aware that only 1/5 of global exporting companies are actually female-owned, women-owned companies. And obviously there's more reason to that than only the supply chain finance, but the supply chain is one of the topics. And we have a great program which we established together with the International Trade Center, the She Trades Initiative. And the She Trades Initiative is basically an online training which provides multilingual training, so it can be used by a lot of people around the globe. Obviously, developing Asia and Pacific as a focus. And what it does, it helps female owners, women owners of MSMEs, to kind of prop up their knowledge on export regulation, on communication, on marketing. But also it has an ESG toolkit. And what this ESG toolkit does specifically is you answer a few questions. It's pretty intuitive. I actually did it, but even though I'm neither a woman nor an MSME owner. But what it does, it compares your current practice with 350 international standards and tells you exactly which areas you should focus on in order to achieve certain sustainability standards. And that obviously opens up a whole new door for these MSMEs in order to access, sustainable financing mechanisms and more affordable financing.
Excellent example. And Nambi, anything from you?
Maybe I just add two points. One is that the data and the tools are the tools are there to collect the data. One of the things is that the tools are designed to extract information from the producers and deliver it to the buyers. And we need to remember that data is owned by those producers themselves. They own their data, they own their story, and we need to recognize that. The other thing is just to build on what Misha was saying as well, is that we know that 4 out of 5 businesses in low-income countries are micro businesses. They're usually in the informal sector. They're usually led by women, and so we need these types of tools that recognize that these are nascent enterprises that we need to be investing in and supporting, and they're going to take a very different type of investment, and it's going to be grants to microfinance to concessional finance, and hopefully through to commercial over time. But that is usually a 10-year cycle to move through that trajectory. And oftentimes we expect, success rates that we wouldn't even get in like the US or other developed markets. And so I think we have to be ready to support businesses through that process and be ready for businesses to fail in that process as well.
Thank you very much. I'm going to open up the floor for questions, but just one more question that I have for the panelists. Well, in terms of supply chains, the way that you make decisions right now, I think are driven by very much economic factors, right? It could be considerations with regards to tariffs. It could be considerations, with regards to, for example, diversity, as you mentioned. But I often find that questions, right, that maybe we do not ask are, what does that mean in terms of the overall supply chain emissions, for example? Or what does it mean, with regards to how this is disrupting some of the livelihoods of people, right? Do you think there's enough attention that is being brought to this? And how do we ensure that the sustainable supply chain doesn't come at the expense of people, right? Smallholder farmers, SMEs, or vulnerable communities. And I think all of you, talked a little bit about that. But there is a shifting in terms of global supply chains at the moment. And I'm not sure whether or not we're asking the right kind of questions that we should, talk about. So maybe, more from Bambi, Dr. Michelle, or Francis, maybe you can comment about that. Should we actually talk more about this?
Definitely yes. We know that a lot of these supply chains are made up of a large number of smallholder producers. And we need to make sure that they are being included in our efforts around sustainability. And it's a lot easier to work with the larger scale producers, get the bulk of your production from them, and call it, move it towards sustainability. But what we really need to do is to make sure that we are supporting the stewards of the lands and the majority of the producers in these values. The way that we do that is by creating mechanisms like jurisdictional or landscape initiatives where we can actually work with the large and the small scale producers in a single landscape, work with them, work with the governments, make sure that we are aligning with the government's objectives in those landscapes, and bringing together the producer organizations, the NGO communities, the business community, and really figuring out what are the types of support, grants, and finance necessary to actually achieve the common agenda in these places. And that includes human development, entrepreneur development, as well as climate and nature targets as well.
Actually, it's the same thing as AI. We know that AI is going to disrupt your supply chain. We know, right? Value chain, etc. But I don't think we ask enough questions. I know that the asset owners around the world are thinking about this quite seriously and saying that even though, AI is seductive or other types, of solutions are seductive, but what does it do for my supply chain? What kind of damage or impact am I making as well? Yeah. Do you guys, anything on that comment on that?
No, I think so on the point of, obviously, sustainability is more than just climate, right? And I just spoke about, just transition in the form of, in particular, gender, but there's many others. And as we, already said in the last question as well, I think one of the ultimate things is to also put that down to the buyer. And the only way to do that is to actually make these things measurable and to make sure that we understand what is my carbon footprint down the supply chain. What is the social impact down the supply chain? What is the impact on nature, biodiversity down the supply chain? And I think it's important, and we need to be more creative about how to do that. And one of the things we did tried and piloted is in the textile sector. We worked with GS1. They're an NGO founded in the early 70s. They basically do these 2D barcodes that you see in every supermarket and all of your products. I think they work with 2 million companies globally. And we work with them to basically, in the garment sector, have this 2D barcode and track not only the product heritage, so where does it come from, but also the carbon emissions of that product along the whole value chain, all the way down to the ultimate farm level. And that has proven to be very successful so far. So we're trying to roll that out elsewhere. But it's solutions like that who will ultimately help us to, introduce not only climate but also lots of other, sustainability-linked considerations into the supply chain.
Francis, anything from you?
Yeah, maybe the one last point I will add is that I think because I guess as a commercial bank, we sit a bit on kind of the tier one supplier and whatnot, so we're a bit more on the surface. But I do think it is our responsibility as a financial institution to ask the questions that we need to ask. So admittedly, I think in the case studies that I've shared, a lot of them have an environmental component to the KPIs and the targets, and I think that's okay as a start. But usually with the companies over the years, what we ask is we do start asking about, okay, what about the social aspect? Are you thinking about setting KPIs for social? And I think for more and more companies, we usually just ask all around. Like, can you give us examples of KPIs from all different aspects instead of just looking at greenhouse gas emissions? It could be a door opener, but it should never stop there.
Someone said, I can't remember which movie this is, but they said that with great power comes great responsibility. Spider-Man? Oh, Spider-Man. Okay. I thought it was Star Wars, no? Sorry. Okay, so Spider-Man said, okay, with great power comes great responsibility. I'm of that view as well, personally. So the larger the corporation is, the greater purchasing power you have. You have the power to benefit so much, but I think it's really important to just make sure that whatever changes that you make, that you don't do any significant harm as well. And with great power comes great responsibility. Well, I'm going to open right now to the floor if there's any questions. Anik, there you go. And this gentleman over here, young gentleman here.
Thank you.
Oh, okay, we'll come back to Anik, but it's okay. Yeah. Okay, bye.
Okay, thank you. So my name is Anik. I'm CEO of Moa Analytics. So I'm also in this sustainability and decarbonization of supply chain space. One big question that comes up is how do you get the data, right? And data does exist. One of the huge challenges that we're seeing is its conflicts of interest, right? We're talking about power. With great power comes great responsibility. But the same thing is that if you are asking suppliers to disclose who their suppliers is, and if you're really thinking about going deep down the supply chain, multiple tiers, then they may not be willing to give you that data, right? Because there's potential conflicts of interest. You might jump the gun. How do we deal with that? How do we deal with the paradox between wanting transparency, credibility in some sense, maybe not just full transparency, and that conflict of interest of not needing to disclose this kind of sensitive information, which might be trade secrets and stuff like that, right? So how do we deal with that? Not every corporation is able to force their suppliers to give that kind of data. And maybe we need to also ask ourselves, should those large corporations actually keep all of that data, right? Do we need all of that information, or what's the minimum information we really need to say that this credible enough? Maybe we don't need all the transparency, but actually we just need to know the total number or this number, or how do we deal with that problem?
Panelists?
I mean, I'll give it a shot. For me, there's two parts to that question. The first one is, and you said that actually, are the deeper tiers suppliers actually able to extract that information and report that information? And if they are, is it credible? So that's number one. And I think that's a capacity building kind of problem which can be tackled through training, which ultimately should be done through services provided by the buyers, because they have that knowledge. So I think that's the way, extension services to farmers, etc. So that's, I think, the first issue. The second issue in terms of transparency and how far can we go, what can be disclosed, what might be commercially sensitive, what might be sensitive even politically, and should it be shared publicly? I think that's a regulatory question. And I think this is where we're still in the early stages of regulatory environment, in particular when we're talking about cross-border. But there are governments like the government of Singapore is actually doing great steps on that, and others to come up with regulation for this. And a good example is actually where we saw a similar development, in my view, is on the whole disclosure of financial related information. So what was started as TCFD and now merged into IFRS standards for financial reporting, IFRS S1, S2. That has shown that regulation can actually push these things, right? And it's a fine line of how much can be disclosed and what's the right amount and what's not. But I think ultimately that's a regulatory question as well.
I would like to just add to that, and I think it's a really great question. From our experiences, we feel that it's definitely a regulatory question, and usually, and that's also why I'm really not working for CDP or EcoVadis, but that's also why earlier I'm saying these kind of solutions usually works, because it's peer pressure in a good way, in the sense that if you're able to showcase that by filling out this questionnaire as a supplier, you can actually respond to this number of buyers' demand. That's usually what's very helpful for the supplier, and they're a bit more incentivized to disclose these data because they realize everybody is asking for the same thing, and what the corporates are asking for ideally should then be helmed by regulatory policy. So for instance, ISSB or certain disclosure standards that would also convince the suppliers that these are the type of things that are not just asked by the corporates, but the regulators are also expecting this. So hopefully all of that would come together to convince them that they should disclose these data. But of course, there's a fine line on how they should manage the sensitivity.
Yeah, just to add one thing is that it's a great question, and it's one that keeps me up at night in terms of this power dynamic that we have within these data systems. And a few years ago, we worked with Starbucks actually to think about digital equity in a supply chain, and we came out with guidelines and principles for how to do this in a fair and equitable way with the supply chain. And it is about dialogue with the suppliers in terms of what are they asking for, and then what are they willing to share. And in a few cases, too, you have the regulatory system in place that's also supporting and providing some kind of safeguards and standard setting for how those questionnaires are structured, how the data is transferred. And if you have strong governance in the middle of all of that by the government, I think it does protect the producers more.
My answer to that is that they should ask for information which is decision useful. Right, so that comes from the IFRS S1 and S2 as well. I think it's a great way to just anchor the thoughts, right, of the person asking for the data. Sorry, young man over here.
Thank you. My name is Behruz, and I'm a master's candidate in logistics supply chain management at Emirates Aviation University. And the question is, what are your thoughts on how to mitigate and how to address the rise of the cost per unit when considering the sustainability pillars in supply chain? In other words, what's the correlation between sustainable supply chain and supply chain efficiency? And since the more pillars of sustainability is considered, the challenging is to decrease the price per unit or at least keep it at the same level.
Okay, I think he's asking that there is administrative burden in asking for this information, and how can we make this more efficient?
Yeah, what's the correlation between sustainability and efficiency in supply chain? Because it's interconnected when it is about supply chain.
Tough question. Over to you guys.
So I'm not sure I get it right, but on the efficiency, I think we already spoke about how to make that more efficient through digital appliances, through using fintech, etc. Just easing that burden. But the price point question, if I understood correctly, how does it relate to then the ultimate, let's say, for example, we look at the textile supply chain and there's an apparel producer who's then selling these products, which might be more expensive because they have a sustainable supply chain. That's what I understood was a question as well. So, yeah. But I actually doubt, just finish that thought quickly. Maybe that wasn't the question, but I'll answer it anyways. No, I'll ask it myself. I actually wonder if that is the case, because sustainability obviously does come at a cost, but it also mitigates a lot of cost. So on an NPV, if you're looking like at the IRR, the return of that investment, you are mitigating costs which you might have in the future, which create contingent liabilities today, meaning actually on an IRR level, it's not going to be more expensive. Plus, in addition to this, for some, and we saw this in the capital markets with green bonds and so on, you actually have a green premium. So, some of the products might actually be more expensive. And you'll see this when you buy sustainable clothing, etc. It might come at an extra cost, but people are willing to pay for it because they know it's for the better of the planet, and they're happy to pay an extra 20, 50 cents or whatever.
Thank you.
You might want to do a paper on this and study it for your PhD.
That's the idea for my thesis, for my master's thesis.
Yeah, yeah.
Oh, interesting. Yeah.
If there are no responses, I'm going to wrap up. We have a couple minutes left with the last question, which is, can I ask each one of you, what is one key ask that you have or what you would like to see to help to facilitate better collaboration on enhancing supply chain sustainability? Yeah.
Yeah, maybe I'll kickstart. And actually, I thought about this. I think I have one common ask actually for my fellow panelists, because I think through this panel, it's illustrated that we cover different tiers of the supply chain. But I suspect that actually the pain points and the lessons learned for the different suppliers might be similar. So I think the hope is that going forward, we can actually work more closely together on how we can kind of partner and address these common pain points, so that we can continue to ensure our coverage for the supply chain is holistic. I mean, individually, for ADB, I think we already have a very long-standing partnership, but it's to continue to ensure we cover what we call kind of the different capital stack for supply chain financing. And I guess for Conservation International, as an international, I guess as a FI, nature is still a nascent topic that we're all trying to grapple with. So I think the work that you do will really be quite helpful for us to better understand kind of the data and the science behind what we're exposed to through our supply chain and our client supply chains. And we look forward to that.
Yeah, for me, it's all about communication. That might be a bit, it's an easy answer, but I think it's all about communication. It's communication vertically, so up and down the supply chain. So suppliers, buyers, consumers, academia, NGOs, governments, multilaterals, financial institutions. We all need to talk about this topic more. And it's also horizontally, so talking about it at regional panels. For example, the ASEAN is a very good example where we have a lot of dialogue on this to make sure that we are aligning standards and actually get to a global aligned standard so that it can be more easily applied, and we all recognize the importance of including sustainability in the supply chain.
Maybe just to build on what Francis and Misha have said is I think of it as we're all seeing one part of the elephant. We're all blind people seeing only one part of the elephant from our individual perspectives. And yet when we talk to one another and when we communicate, we can start to see the other pieces of the puzzle and how they can work together to really support these more resilient supply chains and into the future. So the best partnerships that we've ever had are ones that look at it from what can the company do in terms of setting clear targets, setting the agenda, and working that through their supply chain, but not just then expecting the farmers to change magically. It's they're actually also investing in those landscapes, investing with the farmers and supporting them from the ground up as well. And we need more of those types of partnerships, and we need to bring in not just grants, but the sustainable finance that goes along with it.
And just it gives me hope that we have a master student in the room who's doing his master thesis on supply chain. So, that's fantastic. And sustainability, hopefully.
Very good, very good. Well, we've come to the end of the panel. I think we talked about finance, we talked about nature, we talked about data, traceability, so many things, right? And I also think that it is super important for us to consider the decisions that we make, right, from our vantage. And whether or not there are any impacts downstream to small, medium-sized enterprises, to smallholder farmers, which are so vulnerable to these decisions. So I'll just end that, with great power comes great responsibility, and may we all boldly go where no man has gone before. Okay, thank you very much, everyone.
Thank you so much. May I invite you all to stay on stage for a photo, please?